Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Meir with the Bulletin Board Heroes on Thursday, the 5th of March, here on Share Talk and sponsored by the UK Investor Show. Perhaps a rather surprising inclusion today to start off with is Angus Energy, with shares up by nearly 50%, just nudging the 200-day moving average there earlier on at 1.35 pence, and certainly giving the impression that this could be a sustained rally. The reason for the excitement, I suppose, is the break of the September resistance line there, which triggered the break higher today. That was running at around the 0.9 pence level, and while we're above 0.9 then, looking for, I suppose, a retest of July resistance, post-July resistance at 2 pence as a best-case scenario. But obviously that depends on exactly how the company deals with its recent share price recovery. On to a stock which I think I looked at a while back, and it did seem to be encouraging in terms of potential recovery. Block Energy. Here you can see the way that the shares have broken the top of that triangle around the 3.8 pence level. And at least while we're above that, and especially with an end-of-day close today, above the 50-day moving average, that's the blue line there at 4.29 pence. We're looking for at least a retest of the main post-December resistance area at 5.5 pence, and hopefully much more on tap after that. On to a stock which is normally one I keep an eye on. At the moment, we've got Ilika here, breaking this triangle formation that we've had in place since January, and also the 50-day moving average at 39 pence. While we hold above the 50-day line, which is rising, that's a positive as far as this rally is concerned. Then looking to a top of November price channel target as high as 70 pence over the next month or so. On to Kier, which the rug was pulled from under the bulls, obviously, with the big fall in the stock market last week, down from 150 plus down towards a pound. But we have bounced on the 50-day moving average at 103 pence and broken back above the 200-day line at 111. An end-of-day close above 111, and this February resistance line there should be enough to allow the shares to revisit part of their recent highs, especially with the prospect of possibly filling that gap through 140, which was left on the decline that we saw last week. So above 111 at least, and the 200-day line up towards 140 for Kier Group. Stock which is a strange chart, not the normal type of recovery situation that we look at. It comes in the form of Shield Therapeutics. The reason for the excitement here is the break of that resistance area on the way down at 133. End of day close above 133 today, that neckline resistance, and the shares could at least retrace part of their post-February precipitous decline. The favoured area would be towards 150 to 155, which was support on the way down for the shares. I suppose the stop loss that really back below 130, which was also support on the way down, if you are of that type of charting technical stop loss variety. On to Versarion, which I'm sort of wanting to go up just out of sympathy, if nothing else, given how much the company has been hit over the recent past. We did have it as a potential buy just below 40 pence. We peaked today at around 56 pence, which is a decent 1 week turnaround for the stock. Now just need to wait to see whether the resistance line there from February has actually blocked the shares for the near term, but at least while we're above the 40 pence area, looking for further potential of getting up to the 60 to 65 pence area, which was support on the way down for the stock. Finishing off with Extract Resources, which has been a rather troublesome contender from a charting perspective. We've had many attempts by the shares to get back into bull mode. There was a rally there in November, also a rally in February as well, but we've had this line of resistance from September at a penny, and that has blocked the price action today once again. End of day close or weekly close of above a penny could at least get the shares back up to 1.2 pence, and after that we've got the top of a broadening triangle up to 1.8 pence. But I suppose in a way the longer this takes, the bigger the eventual break would be. The positive at the moment though, which worked as far as Versarion was concerned last week and may work for Extract, is the way that we've had lower lows for March versus February, but higher RSI trades, so that the bullish divergence in the end may be the thing that gets the stock to break, go over the top and break resistance and then head higher. Stop loss at the moment though back below 0.8 pence if you are trying to jump the gun on any potential upside. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.